For 4 straight months, money was leaving Bitcoin ETFs. November, December, January, February, all outflows. Then March happened. $1.32 billion poured back in, ending the longest ETF outflow streak since these products were launched. Here's what it means. Hi guys, welcome back to Crypto in 5. Today we're talking about a major shift in the Bitcoin ETF landscape that could be one of the most important signals of this cycle. After 4 consecutive months of net outflows, US spot Bitcoin ETFs just posted $1.32 billion in net inflows for March. And there's more to this story than just the headline number. Let's dig in. To understand why this matters, you need to know what came before. Bitcoin hit an all-time high of $126,000 in October 25. Then came the reversal. November saw $3.5 billion in outflows from spot ETFs. December, another $1.1 billion out. January, $1.6 billion out. February, $206 million out. That's nearly $6.5 billion leaving Bitcoin ETFs in 4 months, coinciding with Bitcoin dropping nearly 50% from that October peak. The fear was real. The fear and greed index is sitting at 13 today. That's extreme fear territory. But here's the thing. While retail investors were panicking on social media, institutional money was quietly buying the dip. March 26 ended with $1.32 billion in net inflows into US spot Bitcoin ETFs, the first positive month since October. It also marked Bitcoin's first positive monthly candle in 6 months. That's a meaningful shift. And the data suggests it wasn't retail driving this. On-chain metrics show retail deposits remain near multi-year lows. This is big money systematically accumulating at lower prices. Now let's talk about the players. BlackRock's IBIT still dominates, $55 billion in AUM and roughly 45% market share among all spot Bitcoin ETFs. But the more interesting development is what Morgan Stanley just did. They filed an amended S1 in March for their own spot Bitcoin ETF, ticker MSBT, making them the first major US bank to directly issue one. It would list on the New York Stock Exchange ARCA with Coinbase as prime broker and BNY Mellon handling custody. Why does this matter? Morgan Stanley manages $6.5 trillion in client assets and has over 15,000 financial advisors. If even a small percentage of client portfolios started getting a Bitcoin allocation through MSBT, the incremental flow could be substantial. There's also a regulatory catalyst on the horizon. The SEC has scheduled a Clarity Act Roundtable for April the 16th. That's 10 days from now. The Clarity Act aims to finally resolve which regulator, the SEC or the CFTC, oversees digital assets. This has been one of the biggest sources of institutional uncertainty for years. A positive outcome here could unlock even more capital. Keep that date on your radar. So zooming out, Bitcoin had its worst Q1 since 2018, down roughly 23.8%. The 2018 comparison is interesting because that Q1 also preceded a period of recovery eventually. April historically averaged over 12% returns for Bitcoin since 2013. That doesn't mean it will happen this cycle. But the combination of ETF inflows returning, institutional accumulation, and a potential regulatory clarity catalyst makes this an interesting moment to pay attention to. That's your Bitcoin ETF update. As always, this is information, not advice. Do your own research. Hit like and subscribe if this kind of breakdown helps you. This is Crypto in 5.